Good day, traders all around the world. Welcome to our copy trading session, and we will learn few things, guys, about copy trading. As you already know, guys, XM is doing this great thing, fully transparent, so you can see what's going on here, guys, in the copy trading section. So basically, first of all, guys, let me explain how you can access this copy trading feature from the XM. So basically, it's pretty easy. You need to log into your members area. And from your members area, you will be able to see, guys, a couple of tabs which will, of course, point to copy trading. So let me show you, guys, quickly. Just give me a moment. I will show you here on the example. So let's try to log in. So we go to XM members area, guys. All right. Now I will enter credentials. All right. So here, guys, you enter your credentials. All right. Give me a second. This is it. Once you do it, guys, this is how it will look like. All right. So here, guys, on in your members area, there are, of course, different tabs to the left. And here, guys, you click copy trading. And here you will see this new window. Now, what is important here when you log in for the first time? It's important that you understand what this is all about. So I will try to be pretty much precise about these things, what you should be looking at, what you should be focusing, and so on. So let's be honest, guys. Uh, we are all there for profits, right? Of course, because I'm an XM Live instructor, professional trader, full time trader, I also teach how to trade. I also explain different strategies, and I'm also fully transparent when it comes to results. So this is one of the features that I really like a lot. Because in this business, guys, if you want people to trust you, you really need to be transparent. You cannot hide. You cannot. For me, for example, I like to trade live. So I like to see a lot of people, and I'm trading with my account open so everyone can see the account balance, profits, and so on. When I have a loss, I also show losses, so it's not something that it's a secret. But the important thing is to be transparent. How can people believe you if you don't show results? It's impossible, right? So at least I wouldn't believe anyone to tell me he or she is profitable and I don't see their results. So the thing that counts the most in this business is the result. Everything else is subject to talk. So this is obvious here, guys. When you open the tab about copy trading, results will be there. So you don't have to think, is this profitable? Should I do this? Should I not do it? Fully transparent, guys. Look, everything is shown. Everything. So I will go tab by tab and I will explain now. So first thing is the risk assessment. So what is the average risk, guys? Here, look, when you click one certain product here, guys, you will be able to see not just performance, but also, guys, the risk factor here. So let's go back. In the bottom left corner, guys, there is a certain number that can go from 1 to 10. All right. The lower the number is, the less riskier this strategy is. We can say it's a low risk. However, it's up to you to decide where would you place your money at. Here, guys, when you click filters, you can have different risk score. You can see here, you can change. Fees mean how much this will cost you from profits. So you pay, let's say, 10% fee from profits that this account has made. What is the minimal investment? What is the minimum amount you should be putting into in order to be a part of this strategy. So for me, guys, I know myself, and I would always put my money because look, when you trade, it's a surplus of money. It's not something that you have, the only thing that you have, and then you put everything you have into one product. It's not the right thing to do. It's called diversification of the risk. For example, me being a professional trader, I have one account high risk. I have another account low risk. I have third account preparing for expert advisor. And if I'm to invest, this would be my fourth account. So look, guys, I spread different strategies, right, between the risk. So I don't want to risk everything in a single product. I'm manual trader. I trade every single day. I enjoy trading. So that's my account, and I'm pretty okay with trading every single day. I'm intraday trader. My other account also has a little bit lower risk. I'm testing to see what can I do with, let's say, low risk approach. So far, guys, let's be honest, I'm pretty open to tell you the truth. I like risking a little bit more. So my risk score would be 10, and I would put money into 10 risk score. I am okay with this because look, I have managed myself to make 400% from for the last 2-3 months. So I made 4 withdrawals of my deposit. If you want to see how I do it, you can join the XM Live every single day. I am transparent, as I say. You will see that. Here, guys, if I want to put my money somewhere, I would put into the high risk profile. So the only thing which would interest me as an investor here, would be high risk score. Why? Simple fact, guys. There is no money without the risk. You can still make something out of it, like some smaller return. But, guys, look, I really don't want myself to make some small return in favor of bigger return. Because in this strategy that I'm looking, it is the first strategy. Look, 1 month, it already gave 200%. Look, this is great result. I can say this personally because I also can, and I think my last month was something like 150 or 170%. It's a high risk approach. But look, if you want to make good money and you are not afraid of the risk, you need to do it. You can choose from other high risk assets here with high risk score. Look at this, guys. Nasdaq, for example, 30% in one single month, draw down 55%. This is 51%, 31% down. Here, 246. I always look at the difference between these two numbers. So it's not just about the risk score, it's about return versus the drawdown. Now, guys, there is one caveat to this. At least when I look at my FX book results, for example, if I make 100% and then I withdraw profits. So I mean, it's risk free because you already withdraw the full deposit, right? Uh, if I, let's say, make a drawdown on my this next uh, trading cycle, let's say 60-70%, it will say that I made a drawdown of 60-70% overall. But that's not the fact, because when you make 200%, so you already withdraw your deposit, right? It's not drawdown of 60%, it's drawdown from profits, guys. But now here, the only thing which I would be interested in is if I can take 200% and withdraw this for the first month, would this still be the drawdown of 46%, or it's actually less because the money that is left, guys? So you make 1,000 out of 1,000, you withdraw 1,000, you're left with 1,000 from profits, right? Is it money that is left, or is it drawdown from that money or the complete drawdown? This is the question that I would like to address. But look, it doesn't matter. For me, this is perfectly fine. 200% gain with 46% drawdown is great result. This one, not so bad. Look, 53.55 versus 36. This one, a little bit better, right? So you need to take all these inputs into account. Maybe you're a guy who cannot risk and who don't want to risk more. But look, because I'm in this business, it's called B2R, business to retail industry. I've been working for many, many years. I know that big majority of traders like bigger risk. Majority of traders like to risk more. That's how this business works. But there are also traders who don't want to risk much. But look at this, for example. Here, guys, it's 4, risk score is 4, meaning that it's a low risk strategy. But for me, guys, it wouldn't be suitable because it made 15.15% from 30% drawdown. It's not very, I would say, attractive to me. Uh, of course, guys, there are other strategies that also perform with low risk. For example, look at this risk profile. Two very small drawdown, but also very small profits. Maybe, guys, you if you want to invest more money, let's say you want to invest higher sum of money, this can be interesting to you because look, if I'm to invest a surplus, it's okay that I have bigger risk. But if I want to invest not just the surplus of money that I have, but actually a part of my profits, then I would probably go with a little bit lower risk assessment. So if I have, let's say, 50,000 on the table, and then it's a surplus, I can say, okay, I can invest this 50,000 into high risk strategy. But if I have, let's say, uh, if I put 200,000 aside, then I would think how to proceed. Probably I would put a part in this strategy, then a part of the strategy that uses different instruments, maybe Nasdaq strategy, right? And one part definitely will be small risk strategy or low risk profile, which I would need to filter. Let's say risk score is 1. All right. And here, guys, probably I would look to have smaller return, let's say, but with smaller drawdown. So it's about how you manage the risk. So having this in mind, guys, you need to decide for yourself because it's easy. The easiest thing is to look at these numbers and then say, okay, I don't want to risk, or I want to risk, I will put money where I see fit. It doesn't go that way because you also need to look at the fees. Of course, guys, normally for us as investors, the lower the fee is, right? The lower the fee is, it's better for us. But sometimes, guys, you need to give a little bit more in order to take a little bit more. From these strategies that I see here, this one really looks the best for me because 40% drawdown, this is absolutely correct drawdown. The return is huge. Fee is only 10%. Look at the win ratio, guys, 5.87. The higher the win ratio, the better the strategy will perform, right? And here, guys, when you click it, you can see now, of course, this is in Spanish language, so we can easily use translate. So let's see, guys, if you don't understand, uh, it's easy to use it like this. All right. So this is Spanish, I think, right? Okay. So the strategy says we leverage pivot points as key support, resistance levels, and moving average crossovers as entry exit signals. This combination allows us to identify trading opportunities with a high probability of success and minimize risks. So, guys, look, this is a standard, I would say, approach with indicator-based strategy. Because, guys, it uses pivot points and moving averages to make entry signals and possibly as exit signals. One of the things, guys, is that obviously these trades look like leverage trades, but again, the leverage which says 500, it's, guys, look, the leverage is our friend. The biggest enemy of the leverage is not knowing what leverage is. It's people who made leverage their enemies. Actually, guys, when I teach, first thing that I teach people is what is the leverage and how to make leverage your friend. It's not just about uh, The leverage is not just about let's put the whole risk into a single trade. Guys, no, the leverage is about having more instruments possible, not to. So, for example, if you have high leverage, you can open a big portfolio of instruments. If your leverage is lower, you might skip some of the setups because you don't have enough money to cover for all instruments. So the leverage is also about having more diversification, all right, and choosing which trades to close first in order to maximize profits. It's not just about let's put the whole risk into one single entry and gamble out. And actually the problem with the leverage the is actually people. It's not the leverage itself. It's unknown. It's a big unknown to traders who are first time in the trading industry because no one is talking what leverage is and how to use potential of higher leverage. For example, I myself like to use big leverage because guys, I open a lot of instruments per day. I also like to trade gold, euro, dollar, sometimes crypto trades. I mixed everything, GBP dollar, minors, majors, everything. So, guys, uh, having a higher leverage is not your enemy. All right. It's ignorance. Ignorance is your enemy. All right. So we will talk more about this, but just for this session, I wanted to guys explain this for me very good uh, copy trading solution where return is huge, small drawdown, and a really very small fee. At this point, this strategy would be my choice. I hope guys that you enjoyed this. We will talk more next time. Until then, guys, join XM Live, all right, and see me also how I trade and how I manage different risks. Thank you, guys. See you soon. Bye for now.